Good morning and welcome to the Market Forecast. I'm John Hoagland. Thanks for trusting me with your time. Today is Monday, March the 22nd. Saturday, I guess it was Saturday or maybe yesterday, was the vernal equinox. Spring is finally upon us. As always, we're going to look at these markets in context through the lens of risk management. We've got a very busy week as far as economic data and Fedspeak this week. I'm going to kind of go through it a little bit here. Today we have existing home sales at 9 o'clock Central. Powell is scheduled to start speaking now, but there are four other talking Feds throughout the day. Tomorrow we have Redbook, we have new home sales, but 1, 2, 3, 4, 5, 6 talking Feds, 7 talking Feds throughout the day, periodically. We're gonna have to keep an eye and ear on those. Wednesday, durable goods orders, PMI composite flash, and again, Powell speaks, and the 3 other talking Feds also scheduled to speak. GDP on Thursday, along with jobless claims as usual. But again, we've got 1, 2, 3, 4 talking Feds. So a lot of data coming out. We got international trade and goods on Friday, personal income and outlays also on Friday, as well as the Michigan consumer sentiment. So with a lot of data coming out and a lot of talking Feds, there's a lot to be thinking about during the another challenging and hopefully profitable week for us all. Kind of looking over the news this morning, it looks like, we've got U.S. stocks tracking higher as bond yields have been easing off of recent highs. Again, we are facing a very busy week in eco data and Fedspeak. There's a rail merger in the wings here. Canada Pacific Railway is agreeing to merge with Kansas City Southern, creating the first operator to link U.S. and Canada and Mexico, linking all 3 countries together. Crude is starting off on in range-bound territory this morning. It makes me wonder this rail merger with the cessation of the creation of the pipelines, if this has something to do with, I'm sure that we're going to be moving a lot of crude oil on the rails. So, as usual, the VIX this morning basically flat around 21, dollar index 91.84, and the yield for the 10-year is 1.69. As always, I always like to say good morning to everybody. It's good to see everyone. Ralph, first one in the room, you win the prize. Felix, good to see you. Brian, level 2. D. McGregor, Jason, Bill, Nico, Ed Nelson, good to see you. James, Rick, my brother, good to see you. Charles, Adam, Caesar, yes, Ralph, cowboy traders die at high noon. That's right. We are always thinking about trading for tomorrow. Troy, good to see you. Kevin, Joseph, Brian, Will, Mike, the chef is here. John, Keith, good to see everybody. Zorgami, Andre, Oleg, Nemo, Rob, Ashton, Patrick, and Oleg again. I'm going to put the link in here for, I got Angelina, Shady Trader, and Edward popping in. If this is your first trip to the Market Forecast, hopefully you like it. You find something that you're going to find useful for your trading today. Make sure you let us know, say hello, give us some sort of comment, and if you like what you're seeing, give us a like. If you don't, tell me. I always say, if you like what you see, tell everyone. If you don't, make sure you tell me. I've had a little bit of issues here with the charts. I'm going to put those up, and we're going to get into them right now. I'm hoping it won't be too much of an issue, so we're just going to get them up here, and we will be off and running. All right. Okay. As always, starting with the daily in crude. We've got kind of a range-bound situation going on here. We spend a lot of time in this area here. We've tried to push higher. That was a pretty big failure on Wednesday. We had that big move to the downside. There was so much space there, and it was such a beautiful move to the downside. Hopefully some of you were able to catch it, but now I'm seeing it as kind of in a range-bound state. We've got previous area of balance. We've got weekly kickoff levels, 63.80 on the upside, 58.80 on the downside, and we're right in the middle of it. We lost 64,000 in open interest, and that was really the first 3 months. So there seems to be a little bit of what energy coming out. People a little bit less interested in what's going on here. I mean, there's a lot of speculation. It's just probably going to hang around this $60 level for a period of time here. Pretty good volume the last couple of days, of course, but the lack of open interest is supporting the idea that we're coming into a range-bound market state. Taking a look at the 30-minute chart here. This might look a little bit funny. No, that's not the one. This is the one. This might look a little bit funny. Here's our weekly kickoff levels. Here's where we are. What did we do last night? We didn't do anything. We opened basically at settlement, which is 61.44. Not a lot of movement last night. Not a lot of opportunity. I'm going to suggest, of course, let's try and stay patient today. We are in range. We are in value. We are pretty centrally located between weekly kickoff, high and low. I'm thinking we're going to find better trade locations as the day goes on. There's no gap. There's, nothing as far as early opportunities. I'm going to stay patient and wait for something to present itself as the day goes on. That is somewhat of a plan. The ES weekly kickoff levels remain from last week. We didn't get to any of them, and we're looking for opportunities when those levels are approached. There's plenty of headline risks available this week. Make sure that you keep your ears and eyes. Make sure you protect yourself with stops. There's a lot of opportunity for somebody to say something, somebody to do something, and to scare the markets in one direction or another. What are we looking at today? We are inside extended trading hours. We are inside regular trading hours. Really just kind of starting off the week in a kind of balanced area here. We lost 40,000 in open interest on Friday. Some of that, of course, because of expiration, of course. So it's kind of blurry still as of today to kind of look at what we're looking at directionally using the open interest. Tomorrow may be another day. Take a look at the 30-minute chart. We are still on. So settlement in the E-mini S&P is 38.99.75. Put that on your charts. No real major overnight inventory. It looks like we're going to open in range and in the value area. We are kind of hanging here in balance. You can see our overnight high and our overnight low are inside the regular trading hours as well as the extended trading hours on Friday. We're going to be kind of focusing more on the extremes, like our overnight low and our overnight high for opportunities. You're going to stay patient, and again, watch those extremes. Overnight high, overnight low might be decent opportunity if given that chance. NASDAQ, same but different. Central and weekly kickoff range. We've tightened up the bottom here a little bit. There go the charts. Hang on one second. This is aggravating, and I apologize. It works for weeks, and then all of a sudden it just keeps doing this. And I haven't been able to figure it out yet, but we'll get through this. So again, central. Short time frame controlled. Been kind of saying that in the NASDAQ because it is in a much different situation than the S&Ps. Open interest foreboding movement. We added 4,100 in open interest, but again, centrally located. Is that telling us that there's a bigger move coming? I'd like to see open interest increasing over a few days before I'm going to go ahead and say, yeah, there's something going on here and we're going to look for a bigger opportunity. So there may be some change kind of being foretold in that open interest, especially because it was expiration Friday and we gained open interest. Settlement, 12,844.50. Put that on your charts. It's a little bit higher than that here. I'm just going to put that up a little bit. Okay. We do have some overnight inventory to the long side here. We see the market moving higher overnight, away from settlement. That's shorter time frame pea shooters like me that trade overnight. They're accumulating longs and pushing price higher. We do have a gap, so there's a little bit maybe more opportunity or earlier opportunity, I should say, in the Nasdaq than the S&Ps because of the present of that gap. I'm really not seeing this market that well, I don't think. To this morning, I was looking at it, and there was really nothing that was making too much sense. So I'm going to be I'm going to be using gap rules. If we can't close the gap to the high of Friday's regular trading hour session, I'll look for continuation to the upside. I'm going to be also watching for all of our overnight longs to get a little bit nervous and to push this market perhaps to better trade location for longs, even perhaps down to settlement. If they're that long and they all decide en masse to get out, they can push that price down to that level, which would be an interesting opportunity. The NASDAQ weekly kickoff, the 13,170 on top and 12,548 on the bottom. Pretty close to this 10% level here. All right. There you go, Kevin. That link that I put in there is the link to group coaching on Wednesday. I put that link into the live chat there. If you are interested, come on down Wednesday, 1:00. That's your link to sign up for it. Let's take a look now into gold. Fascinating. Possible opportunities here. Yes, of course. It just keeps testing that weekly kickoff high, 1748. Test. 4 days in a row. What's going to happen? Are we going to exhaust the sellers that are creating this resistance up there, or are we going to accept it down below this trend line, which has 1, 2, 3 pretty decent touch points? It's looked a little bit below that this morning. It's open interest. We added 5,900 in open interest. We got a rising triangle kind of pattern here. It's going to be interesting to see how this plays out. Just to take a quick look at the 30-minute chart here. Settlement is all the way up here, 1741.70. We may have some overnight inventory to the short side. It looks like they've gotten short a couple of times and kind of reconciled those positions already. We did not have a gap on the open. There goes the charts. Hang on a second. I am really kind of aggravated on that, and I apologize. It's a pain in the butt. And here we go. All right, so we're going to get through these. So we do have some possible overnight inventory to the short side. No gap, but no real acceptance back inside value. We accept back inside value. There's a probability that the market can come back and trade to the high of value from Friday. So the value low here is going to be somewhat pivotal for me today. If we did not leave a gap. And we can see that our 730 bar, the high is basically the value low for yesterday. So this is going to be resistance, and if it's accepted above that, I'll look for a move back to value high from Friday. I'll tell you what that value high is. And everything's approximate. 1738. 1738 would be the high of value on the volume profiles from Friday. Take a quick look here at the euro. We have open interest falling. We lost 3,700. We get volume kind of falling off here from Thursday into Friday. Maybe a little bit more volume for us today. Weekly kickoff levels have remained the same. They did not change. The dollar has softened a little bit off its recent highs. That's kind of given a little bit of a bid here to the euro. 30-minute. Okay. sitting down this morning, it was, looking at this, it's kind of like the overnight inventory is largely flat. They started lower, they brought the price higher. They may be a little bit long. We've opened with a gap and we've been unable to close the gap. If we do have some overnight longs here, a move back towards settlement might provide an opportunity. And then we have the same type of situation here. We have the market opening outside of range and value. Acceptance inside of yesterday's area of value may mean that the market there's a pretty higher probability that the market accepting value would rotate to the bottom of value. So value low here, value low, I should say, 119.06. So if we accept back to or below settlement, basically, that kind of puts this play in play here. So gap rules. We're still looking for opportunities to buy breaks until we can close this gap, and then we may see that value area situation possibly play out a little bit. The 10-year. Okay, it's maintaining downside market state. Obviously, you can see, we've got 1, 2, 3, 4 touch points on this. We got 1, 2 on this lower channel here, but we're really kind of maintaining market state to the downside. We added 52,000 in open interest on Friday. Is that a lot for the 10-year? No, but it is encouraging for downside continuation. A little caveat to that is we had lower volume on Friday. A lot of folks probably focusing on quadruple witching. And we've seen the rates, the yields fall off a little bit this morning. So we've got a little bit of a bid under the 10-year. That open interest does kind of bode for continuation in its current direction, would obviously be to the downside. So, if I get opportunities to sell strength here, I'm, of course, going to be thinking risk first and putting in a stop. All right. I think we maybe kind of rushed through those just a little bit because of the charts bailing out on me, so I apologize about that if that is the case. Fedspeak. Yeah, they do speak every week, Nemo. Yeah, there's just a lot of them speaking this week. Hey, Patrick. Edward. Mike Kaminsky, good to see you. Murph, good morning. Rich B, hey everybody, took last week off. Good to be back. Good. I'm glad you're back, Richie. Good to see you again. Kevin Scott, Mr. Shine, level 2. Dad, who are you supporting in March Madness? I don't know. I don't really do March Madness. My son likes to do the brackets and everything, but he's already out. I don't know if anybody wins that, but Loyola I think is a long shot, but I get it. Come to the group coaching on Wednesday. I just put in the link again, and we can probably get into deeper about markets and setups and things like that. Good to see you too, Prophet Ian. If you have specific questions, you can email them into me beforehand. Yeah, the ball. I'm rooting for the ball for sure. You can email questions into me beforehand and anything specific, and we're taking questions live as well, so we can get a good conversation going. If you come and you start asking questions, and there's always nobody knows what's going to happen in these markets. Nobody can predict with any degree of certainty of any particular outcome, and certainly I can't either. And I don't know everything. No doubt nobody does. But I really relish the chance to see everybody and to talk to everybody on the forecast and and in coaching and in group coaching, because I'm helping people, I think, learn risk management and looking at the markets through a different type of lens. But there's nothing that anybody's going to be able to sell you, tell you, give you, show you that is going to automatically change your outcome in trading. If you're a profitable trader, great. A lot of it is being consistent in the lens that you look at the market through. My lens is the market profile, 30-minute chart, daily volume, open interest, all of those things kind of come together and paint a picture of a hypothesis that I might try and think about trading. The hypothesis, it could be as simple as, well, I think it's going to be a range-bound day. So I'm going to just wait for the extremes, and I'm going to sell above value and buy below value. Those are things that change throughout the day. I think it's important to always have. I think it's important to always have. That hypothesis, and then to trade to that hypothesis. There's, again, when people say their setups work or their indicators work, I don't necessarily like to use that word work, because it says that this is always going to work. This one works. And nothing works all the time. Nothing works every time. It's always a matter of, again, finding locations that allow you to limit the risk in the direction of the market that you're hypothesizing. You got to have market knowledge, self-knowledge, and multiple strategies based on market state. If you get market state right, you put your strategy in place to that market state, and good things can happen. Bring that consistency to your market, to your trading. A lot of folks ask me, how do you become a consistent and profitable trader? And I always answer with another question is, what do you do? What do you bring consistently into your lens in the market to offer you these opportunities consistently? All right. Stay patient today. It's only Monday. I'm looking forward to another challenging and interesting week in trading here. This is what we do. And I was up early this morning looking forward to going, and I was going to be presenting the market forecast in a different venue this morning. But as sometimes happen, things change, and I'm in my usual spot this morning. But one of these days, I'll be presenting in a different spot once in a while. So looking forward to doing that. Looking forward to seeing you. And Travis, you said it. Risk management is king. Miss Ella, I would like to learn more about overnight positions. Miss Ella, come to the group coaching on Wednesday. Send in the question or just type it in when we're in it, and I will be happy to talk about those overnight positions. And we do that from here today. We do that from time to time here. I try and say, I think that there's some overnight positions according to the way the market moved. And sometimes you can find decent opportunities off of those. So be happy to discuss more and even more often in the market forecast. All right, let's take our deep breath. Stay humble, grateful, and creative today. We should have our new Forex out at some point today. I'm looking forward to taking a look into what's going on in those currency markets and presenting that. And other than that, we should see Dan, I think, for the market recap this afternoon. So stay tuned. And as always, I'll be back tomorrow morning at 8 o'clock for the market forecast. Get out there and profit. Trade well today. Risk management. Risk management. Risk management. Cheap trades, cheap trades, cheap trades. Trade well.